All right, guys, back to work tonight, Thursday evening, September the 3rd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight is to help us find the best entry setups for tomorrow. That's Friday. Nope, not just any Friday, not just a summer Friday, not just the last Friday of the summer, but Non-Farm Friday tomorrow morning. Boy, say that 10 times fast. Anyways, I got a great video in store for you guys and gals tonight. The charts are already in the background. As you can see, we got the E-minis, we got the oil, and of course, we got the gold on our radar for tomorrow. Boy, what a bloodbath, right, across all markets today. Nobody was safe in the markets today, right? Markets really took a nosedive here today. And of course, as we go into tomorrow's Non-Farm Friday session, the window is much smaller. We got to be ready for whatever price action setups we get for tomorrow. I got a great plan for you guys for tomorrow's Friday trading session. Before we jump in though and get our hands dirty on these charts tonight though, I just want to make sure to remind you, make sure you subscribe to this YouTube channel, right? Hit that subscribe button. That way you never miss all the good stuff we publish every evening on this video. And how about questions? If you have any questions about anything we talk about tonight, drop those questions in the comment section below. I'll get them answered as soon as we finish up here later on this evening. And as always, I really appreciate you guys tuning in every evening. If you're like me and you rely on this video to get your mind right and get those charts right for tomorrow, how about a thumbs up here for me tonight if you like the content here on this newsletter video. So don't forget to subscribe. I know many of you guys already have, but if you haven't done so already, make sure you subscribe, hit that thumbs up button if you like the content, and drop those questions in the comment section below. But let's not waste any more time though. Time is ticking. The last Friday of the summer is right around the corner. Let's kick off tonight's video with the calendar for tomorrow, courtesy of Econo Day. Now, of course, tomorrow's a Friday. Now, normally, any Friday, we always talk about Fridays are early in, early out. We'll be together trading tomorrow. We usually trade from 8 o'clock to about 11:30 a.m. Eastern time, right, Monday through Friday. Now, of course, on a Friday morning, you've really got to have a good reason to be trading after 11 o'clock, right? So usually 11:30 is about as far as I'll push it in the trade room during the week. On a Friday morning, though, 11 o'clock is definitely going to be, right, a good cutoff for day traders on a Friday morning. Now, on a summertime Friday, that might be closer to 10:45, right, 10:50. On a summer Friday, the Friday before Labor Day weekend, this is why I say tomorrow might be a relatively small window. So what I'm going to do tomorrow is we're going to give it our very best tomorrow because obviously, every day is an opportunity to learn, to earn, right? We'll get a couple good setups. The problem tomorrow though is that window is going to be a lot smaller, right? And because we saw this bloodbath in today's markets, I'm not sure if you tuned in at all today, right? But the markets, they went a little bit lower today. And so with those big moves down today, tomorrow's probably going to be a bit of a range-bound market. And with that, with all that action we saw today, right, tomorrow it's going to be a bit of a rebalancing. And with it being a Friday, a summer Friday, the last summer Friday of the summertime season with a holiday on Monday, we've really got to be disciplined tomorrow morning. You've got to be disciplined. If you're with me in the trade room tomorrow, I'll be disciplined. What I would imagine tomorrow will be like is it'll probably be a decent amount of chop and slop, but there will be some key opportunities, and the key tomorrow will be just staying patient, staying disciplined. As I tell my clients, stay engaged, right? Keep up with the story the price action is telling you throughout the morning tomorrow, and we're waiting, and then when the time comes, we hit it, right? And so that's kind of how I anticipate tomorrow to be. Smaller window, a little bit lower volume, of course, because it's a summertime Friday. It's obviously the Friday before Monday's Labor Day holiday, so that window will be smaller. So patience, discipline. But when the time comes, though, you'll have to have the confidence to pull the trigger, right? That is what's probably going to happen for tomorrow. There will be a couple good shots for tomorrow. So that's kind of the general overlay, general idea for tomorrow. Early in, early out. Pick your spots wisely, and of course, don't force them, especially with a type of day like we saw today. Now, of course, we are still watching. In fact, we saw some headlines today about stimulus. Wouldn't it be perfect timing if tomorrow morning we hear, oh, all of a sudden there's a stimulus package agreement and we're going back to the highs, right? Could that happen tomorrow? It's possible. It doesn't seem probable, right? But it's possible for tomorrow. But that is something that we have yet to hear a lot about this week. That is a known unknown for tomorrow. So will we hear more about ongoing stimulus? We did hear some headlines this afternoon out of the White House. Apparently they are starting to find some common ground. Will that pick up steam for tomorrow? That is anybody's guess. But again, what we know for tomorrow is we know tomorrow has that big news at 8:30 Eastern time, right? That is the non-farm payroll report tomorrow at 8:30 Eastern time. Be careful overnight. It's probably going to be pretty slow and pretty choppy overnight. It usually is ahead of these employment numbers. And then on top of that, we had that big bloodbath down today. So careful here tonight. We'll put the plan together for tomorrow. It's going to be disciplined. It's going to be patient. It's going to be waiting for our shots. But once we get them, right, we'll trade them with confidence. So big news tomorrow at 8:30. You want to be at your desk early. Get those charts all prepped up after the overnight session and be ready for that 8:45 to 10:30 block, right, until we run out of time on Friday morning. Now, don't forget tomorrow morning, every morning, Monday through Friday, we'll be in our trade room. I would love to have you there, right there with me. I'll put a link to join as a new member in the description of this YouTube video. So if you want to get registered, come out and trade with us every morning in the trade room. We'll be there tomorrow morning at 8 o'clock Eastern time, a front row seat for the employment number at 8:30. So get there early tomorrow, right, but keep those lunch plans, because we're probably not going to be trading too much right after 11 o'clock Eastern time. All right, guys, that's the plan for tomorrow. Let's grab some charts now, and let's take a look at what the candlesticks are telling us here this evening. As we jump into the charts, got some S&P, got some oil, and of course, we've got some gold right now. Right now, a lot going on. Gold, I'll tell you, gold's going to be a little bit of a head scratcher. There's a lot to kind of decompress on the gold right now. Got a combination of a channel and a range and a triangle. So we're going to put that plan together on the gold. I really see some great setups around that 1955, 1960 level on the gold. Over on the oil's pretty interesting tonight because oil has two ranges. You'll see two ranges that are going to be combined into a larger range. We haven't seen something like this on oil in a very long time. You'll definitely want to stick around for that oil chart tonight. And then how about that S&P, right? S&P got clobbered. Well, let's jump into that chart. Let's grab the chart here on the S&P. A big move down. Hey, there's that weekend gap, right? There's that weekend gap from 2 weeks ago. But all kidding aside, though, the S&P is a bear market. I think you can probably tell by looking at that. It's a bear market into what is really a wedge, right? It's really a wedge pattern here right now, right? So bear market into a wedge. You can see a range that I've put together right on there as well. And so we know we're bearish, right? That's pretty easy to see. In a bear market, I want to sell at resistance. There's a few different ways I can find areas of resistance. I like to use this range, right? Because that range gives me a couple key areas overhead to pay attention to. I also really like, my favorite resistance level is this level right here, 34.92.5. That would be the ideal kind of sell zone right up top here. So we're bearish. I want to sell high. I want to sell at resistance. I think the hardest part right now is I don't want to be too aggressive down here. You'll notice that big move down, right? In our trade room, we talk about how that opens up a loop, right? And then, of course, they close that loop. So there's very little sense of urgency in this market right now. And again, like I said earlier, because of this big move down here, we've got to think a lot of the slower moving averages. The market kind of has to catch up to kind of where we are right now. So I wouldn't be surprised if we see a little bit of sideways chop here in the overnight into that big news event that we have tomorrow morning at 8:30 Eastern time. So we'll talk about kind of the good, the bad, and the ugly here as far as what I'm looking for tomorrow. my kind of, if I had it my way, if they called me tonight and said, okay, Joe, what do you want for tomorrow, man? I would say I'd like to get up inside that battle zone, that 34.92 area, right? I'd like to get up inside that battle zone, get some buyers to come in, right? It'll look a lot like this one, right? Get some buyers to come in, get them to commit on the pullback, and then look to sell into those stop losses, right, for that run back down again. So that would be, right, that would be kind of my, if I had it my way, I'd like to get up and into the base of this wedge, right? The base of that wedge, meaning it's where kind of this wedge begins here, right? So the kind of the highest part of that wedge. I like that area. I'd like to get up into that area, get those buyers to come in, try to buy a pullback. It's a bear market, right? So buyers are on the wrong side of that momentum. We can sell into stops. We can sell those pullbacks, right, on the way back down again, right? So basically a very common combination, a buyer failure into a seller pullback for a retest of that low. So that'd be my dream come true, right? That's my A-plus scenario for tomorrow. At the same time, though, we also know we've got this wedge, right? And this wedge, if I zoom in a little bit on this wedge right now, you'll notice how, right, it gives me a target, right, down to that 34.14. I have a big round number at 3,400, and of course that little weekend gap down, that's from 2 weeks ago, that 91.5 area. So there's no reason why this market may just keep on grinding lower. In other words, we may not see that nice deep pullback, that failure into pullback combination off the high. The market may grind lower. Now, if the market grinds lower, we know where it really wants to go, right? It wants to get down into that area at the very least. And so what would be the best way for me to trade this if it doesn't give me that pullback? It would be a trap, right? As we always say, the best entry pattern to avoid selling too low is going to be a trap entry. So if we don't get that pullback, right? If we don't get that run up to give me that nice juicy short, right, off that high with a beautiful risk reward ratio, if we don't get that kind of dream come true scenario, I will be looking for basically a bull trap, right, to get short on the way down. And the idea behind that is we can see where they're trying to go. We know there's a lot of bear momentum. The problem is, though, 1, 2, 3 legs down, I don't want to be getting that aggressive, right, selling this low. So if I can get a really deep pullback, I'm looking for buyer failures and pullbacks on the way down. If we see only a shallow pullback, I'm focusing on trap patterns, right? So failures for deep pullbacks, shallow pullbacks will give me trap patterns, right? Now, what if we stay inside the range here? Because that's a really likely scenario, right? That's a really likely scenario. What if we get stuck inside the range here? Like I said, with tomorrow being a big news day and with today being the bloodbath that we saw, a lot of the markets will they'll most likely tread water here overnight. So if we do go sideways here, right, overnight, then what do we do here? If we go sideways overnight, what I'll do is I'm going to measure that distance. I'm going to pop it right up overhead, and that's going to kind of become my target entry area right overhead. Does it make sense, right? So I'll take the amount of the move below the range, and I'll project it up above the range, and that will give me like a little target area of where I want to look for my entry. And then the entry pattern I want to use is I want to wait for a breakout. I want to wait for what's basically a pullback failure, right? And again, it'll look very similar to this one, right? They'll go up, they'll try to pull back, and we'll just simply sell into their stop losses, right? So that will be the third kind of scenario to consider for tomorrow, right? So if it does go sideways, we're focused on what I call 2-try failure patterns, right? Up above the high of that trading range. So again, if I can get a deep pullback, I'm looking for buyer failure into seller pullbacks for a collapse back down. If we get a shallow pullback, I'm looking for traps to avoid selling too low. And if we go sideways, right, I'm focused on 1, 2-try failure patterns up above the top of that range, right? And again, check out the pendulum swing, right, as kind of your minimum criteria there to really hone in on where you want to look for those entries as we go. So don't forget, tomorrow morning, right, we'll do this together in the trade room. But if you're not with me tomorrow morning in the trade room, the next best way to learn and master all of these entry patterns is to grab our free trading course. I'll put a link in the upper right-hand corner for you right now. Inside of that free course, you'll learn my trap patterns, my favorites, my failure patterns, the most common. You'll also learn pullbacks and strength. I'll teach you how to draw channels properly and draw ranges. Everybody loves that free trading course. So grab the little pop-up. It's popped up there in the upper right-hand corner. Again, I'll put all of the links you guys need here, right, in the description of this YouTube video. But grab that pop-up in the upper right-hand corner, right? Get registered for that free trading class. You'll love that course. And then that way, when we come back next week after the holiday, you'll know what I'm talking about when I say failure into pullback combination, right? You'll know what I'm talking about when I say a bull trap or a bear trap, right? So make sure you grab that free course. Now, the one thing I haven't talked about yet is how do we buy this market, right? How do we buy this market right now? Can I buy it right now? Probably not a good idea to buy it right now, right? We're a little bit too bearish for that. Plus, again, I think as this thing goes higher here, you're going to see a lot of people coming in and trying to attack up inside that area here. So we have to anticipate that. And what I'm going to do is I'm going to wait for what I call a 1, 2, 3 reversal pattern. I'm going to ultimately wait for the buyers to take control. I'm not in the business of picking a bottom on this, especially with that round number down there and that weekend gap. Trying to get long off these lows right now might be a little bit too aggressive for this scenario right now. So I'm going to wait for the 1, 2, 3 reversal, right? Not my favorite, but the most reliable reversal pattern is going to be this strong move up, a pullback to the moving average, right, and a jump off the moving average. Again, I call it a 1, 2, 3 reversal. This would also be a 1, 2, 3 breakout. The most important thing though is I want to get some strength going higher. I want to see these buyers actually show up and hold that pullback and give me some momentum. Show me you really want this, because we see a lot of really deep pullbacks, but they fail, right? They fail when they pull back again, right? So a lot of times it goes up, pulls back and fails, and that's exactly why we'll be looking for that failure right tomorrow morning until, of course, those buyers can take control. Once I get that 1, 2, 3 move, now momentum shifts. I can mark up that high, I can mark up that low, and this is where your patience pays off, because that trade is really, really reliable. It's a very reliable entry once you get that 1, 2, 3 reversal. Not so much in the first pullback. The first pullback is not going to be as reliable, right, for reasons we've already discussed. So I'm waiting for that. Again, I'm waiting for the reversal, then the pullback. Now, where would these buyers be trying to go right now, right? Well, possibly all the way back up into that, right, into that range. It seems like a mile away right now, and it really is, right? 35, right? 43 3/4. So if the buyers can take control of this and really start getting some momentum going here right now, right? Hunting for that 35, 43, they may end up kind of conking out eventually on that weekend gap. You know what I mean? We might see kind of a 1, 2, 3 reversal. A lot of times what will happen is you'll get that next leg, right? You'll get the buy off the low, but because it's a very high probability buy. But a lot of times what happens is the market will kind of run out of gas, if you will, right, and kind of come right back to it. So that might be the case here tomorrow. Either that range at 43 3/4, or it may settle in right to that weekend gap as well. Wouldn't surprise me, right? Finish up the week this week along where we finished up last week. As we go lower, though, as I mentioned earlier, that wedge target, right, big round number, and of course that weekend gap from 2 weeks ago is on our radar. And if the hits the fan again tomorrow and the market really starts to tumble, right? We got more levels, 44, 19, and 3,300. I would be very surprised if we saw back-to-back days like we saw today. Chances are tomorrow will be a bit range bound. So again, like I mentioned in the news breakdown, tomorrow's probably going to be a whole lot of waiting, no, and then, okay, that one looks good, take it, right? That's probably what tomorrow is going to feel like, and I'll be excited to see you guys with me tomorrow at the opening bell. All right, how about some oil here right now? Oil is in kind of a similar situation. We can easily see we're bearish. And what's really interesting on the oil is that there's actually two ranges that are kind of being made up into one range right now. Now, this would be what market profile theorists would call a double distribution day, right? If I can use a fancy word for you. Basically, as the market went lower, there's a bunch of volume here, there's a bunch of volume here, right? This is why they call it a double distribution day. Boy, I haven't said that term in a decade probably, right? I mean, we don't see these very often. They're not as common, but what's basically what it is there's a range here, there's a range right here, and so most of the volume is piled up here and piled up here. To kind of, basically what we have is a bear market that went into a range, right? It went up, came back to it, and then finished the day way up top here, which is just strange. It's very strange. It's strange how, because usually when you get a market that, runs lower and goes into a range like that, you'll get that pop up, but usually it'll finish back inside that range, right? It'll usually finish back inside that range. To see the market finish higher, right, and go up like that, it's just a very strange, right? Just a very strange way the day ended, which caused me, of course, to look a little bit left. Now, if you look left, you can kind of see why they did this, right? If you look left over here, it's that major low that we talked about, right, from last night's newsletter. So it looks like they're kind of gravitating back towards that low. To make a long story short, though, these two trading ranges, right, this double distribution, if you will, what will probably happen is the market will probably fill in this area here and create one much larger range, which is why I've created this triangle, right? That's why I drew the triangle on here. So one thing about a double distribution day is, which I'm sure you guys probably know if you study this stuff, right? But if you don't know, one thing about a double distribution day, if I can get that back on there, right, is that you've got your high volume node, you get your high volume area there, right? Markets will tend to rotate, right, from high volume to low volume, high volume to low volume, and it will kind of fill in this area. And by the end of the day tomorrow, we may end up seeing a volume profile that looks like that. Right? So you got most of the volume in the middle. It's usually what happens is when you've got these double distribution days, these two ranges basically, they usually kind of fill in the middle, right, if you will. So you might want to think of this, as just kind of like one big wide trading range, right? So that's kind of the way I look at this chart. It's a bear market, right, into a range. Again, you're more than welcome to call it a triangle. You're more than welcome to call it a double distribution day, right? That'll probably impress your buddies. But the reality is it's one big trading range. And how do we trade a range? Well, first of all, we buy low, we sell high. We focus on failures. It's a bear market right now, so selling high is definitely going to be just a little bit more optimal or more reliable for us. We know that the middle of that range will be a magnet, if I can make my keyboard work, right? The middle will be a magnet, right? So what goes up will come back down. What goes down will likely come back up, right? So just keep it simple, right? Don't worry about the double distribution. Don't worry about two trading ranges. Just think about they're going to probably try to rotate back and forth in between these two ranges and create one big range for tomorrow. So how do we trade this stuff? Well, we talk about this quite a bit on this newsletter, don't we, right? A bear market into a trading range, because that's pretty much all it is, right? What do we do with a market like that? There's really two ways to trade it. Right? One is to trade the failure above, right? We wait for that breakout. We wait for that buyer failure, and we sell into stops, right? We call those what? We call those two try failure patterns. Wait for the breakout. Wait for buyers to kind of dig their own grave, if you will, right? Let those buyers wrap that rope around their neck and just sell them to stops. Okay, that's the easiest way. Well, it's the most reliable way. You can try to pick tops above this, but what happens when you pick tops is you'll almost always get stopped out, right? When you try to sell it, you'll get stopped out. So I never try to pick the top on that. I always try to wait for that failure pattern to trigger. Okay, and then of course the breakout. So we can try to break out going lower. Now I have two favorite breakout patterns. I teach a lot more of them in the video course. My two favorites though are that 1, 2, 3 breakout. right? Moving average comes down. It's very similar to that reversal pattern we talk about on the S&P. 1, 2, 3 breakout. That confirms the range has now turned into a trend. I can mark that low. I can mark that high, and I can sell off of that high, right? Remember, the first test is the best test when it comes to those 1, 2, 3 breakouts. And then the second type of breakout I like to use is the 2 try breakout. This one, again, will be a strong move down. But this time around, though, it'll be a shallow pullback, a lower low, and a trap high. I call these 2 try breakouts because there's 1 try for the bulls, 2 try for the bulls to go back up into that trading range, right? So you've got your buyer failure, right, above the top of the range. You got your 1, 2, 3, right, 1, 2, 3 breakout, and of course you got your 2 try breakout. Right? Those are 3 patterns that I'm looking for here tomorrow. Ready? Screenshot time. Screenshot. 1, 2, 3. Right? Take that screenshot. Pause the video if you want to. This is a great screenshot for your trading journal. And don't forget, in my trade room, I provide all the cheat sheets, right? All the checklists for this. So we actually do this stuff in real time as it's developing. We go over that checklist, right? We know what the patterns look like. It's just a fantastic place to learn and earn. Now, back to the chart here now. Okay, here's my range. And again, we're going to probably get more details on this range here soon. But, think about how the range looks right now. So knowing that, let's go to these battle zones. Right, what do we have below us here? 39.03, right? Keep an eye on that level for tomorrow. Okay, so now, right, how do we trade this now? One option is going to be, I'd like to get up above this high, get these buyers to try and fail, and sell back down again, right? So here's our range. Right? Get this thing to, let's make that a different color, right? Get this thing to jump up, get these buyers to try and fail. And honestly, this is a wide enough range where you might be able to pile on that failure into pullback. One of the nice things about a wide range is that there isn't as much of a risk reward ratio problem, right? If the range is really narrow, then you've really got to get a big breakout, right, before you can sell it, because that's the only way to get a good risk-reward ratio, right? But if that range is really wide, well, now you can be relatively aggressive at these, not aggressive, but you don't have to get as big of a breakout. And you could a lot of times, too, get that pullback pattern as well, right? So a failure into pullback, just again, stay out of the middle. Right? Out of the middle. So if you can what I always do in my trade room is whenever I have a really big wide range, I break up the range into thirds, right? Into thirds. And I focus on selling the upper third and buying the lower third. You'll be amazed at how that works. You'll see, right? You'll see. So in tomorrow, right, if this range, of course, kind of fleshes itself out a little bit, right, kind of break it up into 1/3, right, 1/3 right there. You know what I mean? Right? So stay focused on selling in this upper third, right? Buying in that lower third. And of course, because it is a bear market, we'll focus on selling. All right? That's kind of what I'm thinking here for tomorrow. So again, right, if we can go up, I'd love to get those buyers to come in, try to buy that pullback, a 2 try failure into a bearish pullback pattern, again, in the upper third, right? Make sure that bearish pullback is in that upper third, you know what I mean? That way you're not playing with fire in the middle. So that would be a setup I'm watching for here tomorrow. You might notice, too, that we might come off that high here right now. The problem is that we're going to be right in the middle here. So if we don't get that, if we don't get that kind of pop up, that failure, pull back down again, if the market just kind of sinks lower here, what's my concern? My concern at this point is I've got a rising support trend line. It's going to be difficult to justify selling into that support trend line. So remind me, guys, I know a lot of you guys and gals watch every evening. What is the best setup to avoid a rising support trend line? What is the go-to pattern to avoid selling low, right? Selling into support. It's a trap, right? We talked about that earlier on the S&P, right? So if we don't get that move up and the failure back down and the market kind of sinks here, all right, wait for that bull trap. Okay, because the bull trap is what professionals will use to avoid selling into this trend line. right? That trap will be what you want to look for, right? As the market kind of grinds, right? Kind of grinds lower there. So we're definitely going to keep an eye on that as we go. Does that make sense, right? Does that make sense? If it does, right? Maybe a thumbs up. If it doesn't make sense, why that trap, let me know in the comment section below, and I'll make sure to kind of redo this presentation for next time and do it a different way, right? I want to make sure everybody understands this. And then, of course, as we go lower, right? As we go lower here, because of this wide range, right? Because of this wide range, this could easily, nice strong move down, hold that pullback, and run, right? Now, they didn't do it there. They sure didn't do it there. So we can't predict this by any means. We have to wait for it. Wait for that strong move down. Well, the strong move down is definitely possible, right? Sink back down to retest that low. So if we do see that strong move down, we do see that pullback to the moving average, and we jump off that EMA, now we know, mark up that low, mark up that high. And again, remember the first test, right? Always the best test. Now, we may sit around that $40 a barrel here tomorrow for a little bit, but again, I would imagine this will probably be, well, like I always say, whenever you get a 1, 2, 3 reversal or a 1, 2, 3 breakout, I really don't care where that pullback is. It's usually going to be a very reliable entry off the high of that channel. What we might get is, right, we might get it to run and then stall out and come back to that $40 a bit. You know what I mean? That might happen a lot like on the S&P, where it may end up around that weekend gap. But if it keeps on going though, right, I will certainly be looking for a final runner target at that 39. We'll call it 39 even. It's a big low from a few months ago, right? So 1, 2, 3 move down, mark that low, mark that high. First test is the best test, right? Take a quick 1-to-1 target, leave that runner, and again, trail that stop because it may come right back up, right into that $40 a barrel. And then, of course, at the same time, if we get like a 1-2 go, definitely keep an eye out for that shallow pullback, that lower low, and that 2-try trap. These are very common in range breakouts as well, right? We call that a 2-try breakout pattern. Now, with these 2-try breakouts, I'm always looking to combine them with some sort of channel. It's not absolutely required, but you definitely want to look for them because they usually are around that area. So you can usually time your entry off the top, right, of that channel. So those are the 3 kind of basic criteria, right, for how I want to trade this range. Now, can I buy this market right now? Is it possible to buy it? I would definitely be open-minded to being a buyer on this right now if we get the right pattern. For example, if these buyers, right, if the buyers just take off, right, if we just see this thing rip going higher here, that to me will be enough for a 1, 2, 3 reversal. And that will be enough to draw the trend line off the high, find that trend line off the low, right, and buy the low of that hidden channel. Targets up around that 42.80, right, 42.79. We've got that range, right? Remember that range overhead. So, if the buyers wake up tomorrow morning and they get, a thorn in their rear end, right? And this thing gets going, 42.80, 43 is a really nice target. Now that's asking a lot, right? So you're probably going to have some sort of bailout news, right? The don't call it a bailout rescue plan, right? May come out tomorrow. Who knows, right? But that's probably what it would take to get this thing to wake up and make a run on that. But again, right? Be ready for it. 1, 2, 3 reversal. Now, if they get that strong run up, big strong run up, shallow pullback, right? Higher high. Absolutely, right? Trap low, below that low. And again, I will be looking to buy that pull back to the low of that channel, right? I'm always looking to combine those channels. Now, why not just buy this one, right? Why not buy this one? Because of where we are, right? Up around the highs here. That's why I can't justify buying that just because of where it is right now. But if they can hold the pullback, then absolutely I can be a buyer on the next pullback, right? That'll be a reliable enough time, and actually a very reliable time to buy that first test. Now, let's say we also go down to those lows. Right? If we do make it back down to those lows here for tomorrow, that will be a major turning point, and we will be below this big double distribution range, right? So if we do make it down to that low, that's where you can definitely start to look for those crown reversals, right? So 1 try for the bears, 2 try for the bears. I call this a crown reversal pattern. Now remember, you only want to take these patterns. Well, first of all, when it comes to a trend reversal pattern, I assume that you are already consistently earning on trend following patterns. Okay, one of the things I tell my clients is don't try picking tops and bottoms in these markets until you've learned how to actually be disciplined to follow the trend, right? So if you're taking these counter trend trades, I'll tell you the same thing I tell my clients. These are not for brand new traders, right? You've got to really focus your energy when you're a new trader on getting your winning percentages as high as possible, because that fuels everything, right? It puts the wind at your back. So as much as I love these crown reversal patterns, if you're just getting started or if you haven't seen consistency in your trading yet, you really got to be careful with these reversal type patterns because the odds are not as good. And it really takes discipline, right? These patterns usually take a lot longer than you think they will. They're 25, 30-minute reversals because you're turning around this battleship. Also, too, if you're trading a 4-contract position, you want to be down around 2 or even 1 contracts, right? So if I'm a brand new trader and I'm trying to trade these reversal patterns, right? Again, against the trend, not a 1, 2, 3 reversal. That's a great pattern, right? Everybody can take those ones. But if you're looking to pick a bottom on this, I'm going half position size, right? If not only 1 contract. And again, I've really got to earn that, right? I've got to earn the ability, the right to take these counter trend trades, right? So that's definitely a pattern I'm watching for tomorrow. Now, I'll tell you, the crown reversal is a great pattern. It happens a lot. And I cover it like everything else. I cover a lot of details on these reversal patterns in that free trading course that I linked up in the upper right-hand corner. So if you're serious about your trading career and you want to really master these patterns, again, the trade room tomorrow is the best place to be. But I'll put a link up there for you in the upper right-hand corner, right, for the free trading classes. That way you can learn these strategies. And next time we see each other, we'll get the most of our time together on this video. All right, I think we're looking pretty good. We've got our short side, our long side is all put together, right? How am I doing so far? Any questions? Don't forget questions. Type those questions right in the comment section below. And let's see what we got here on the gold tonight. Now, I teased you guys a little bit on gold right now. We have a lot to kind of decompress here, right? A lot to unpack, if you will, right now on this gold. And really what we're dealing with right now, it's a bear market. I think that's pretty easy to see, right? Market is making lower lows and lower highs. So I want to be a seller, right, at resistance. I want to sell at resistance. You'll notice here I've got 1 leg, 2 leg, 3 leg down. Let's take that off the screen just so we can kind of unpack a lot of this stuff right now. Okay, so we know we're bearish. We want to find a level of resistance. I think the most important clue on this chart is this spike in channel. Right? Spike and channel pattern. That spike and channel rotates very, very well, right? So you'll notice here that spike and channel. Now, we talked about a spike and channel last night on the newsletter. What's the best way to trade a spike and channel? The best way to trade it is to go up, right? Go up into the base of this channel, right? Get that nice deep pullback, wait for a failure, and sell it back down again, right? That's my favorite strategy for a spike in channel. At the same time, though, is it possible that we might rotate back to the low of this channel again to finish off that retest of that low, that measured move? It definitely is possible. So I do want to be ready for that as well. So keep that on your list here for tonight, right? We'll talk about both those scenarios in a moment, right? A buyer failure, or if we don't get that nice deep pullback. That's kind of the foundation of this market right now. At the same time, you'll also notice there's a trading range on here, right? And this little range is being a sneaky little guy, you'll notice, right? He's a sneakster. He's definitely sneaking up on us, and this is ahead of a non-farm Friday tomorrow, ahead of a holiday weekend tomorrow, and of course after just the crazy markets that we saw today. It wouldn't be surprising at all to see us get stuck inside this range. Now, remind me again, what does a range tell us to do? Right? We just talked about this, right? What is a range? A range tells us to sell with those 2 try failure patterns, right? Above the top of that trading range. Trading ranges tell us to 1, 2, 3 break down, right? Or 2 try breakout patterns, right? So same basic idea as we talked about on the previous chart. So that is a variable as well. And then I think one of the coolest things about this chart are kind of the hidden levels. For example, I've got this trend line drawn up. Anytime I have a trading range, and this is where that checklist I was talking about earlier comes into play. Anytime we have a trading range, I like to find these expanding triangles, right? You'll notice how it really rotates really well, right? Look at how good that rotation looks. Looks beautiful. So that really, I mean, to me, that is a cherry on top, right? That to me is a cherry right on top. That is the area for tomorrow, 1953 and change. But wait a second, there's actually one more hidden level on here, and you can probably see it already, right? If I take that low and I bring it up around these highs, I mean, it's getting ridiculous now, right? You got that trend line overhead, you got this trend line, you've got the base of that channel, you have your range, right? Your range expansion areas overhead. I mean, come on, right? Why don't you just give us the money right now, right? Obviously I'm joking around, but this is the that makes it very obvious to us of where we want, right, to be selling, right? Selling at resistance, lots of resistance up around this 50 to 56 area here. Now, like I mentioned earlier, though, there is a good chance this market may just keep on rolling lower, right? So if it does roll lower, we need to plan for that as well. So it really comes down to, and I know this sounds very basic, but it comes down to, do we go up? Do we go down? Or do we go sideways? That's pretty much the way it breaks down right now. So let's put that plan together, right? If we go higher here, what's the plan? It's always the same, right? Almost always the same. Sometimes it changes, right? But we're looking for failures, right? As we go higher, I'm looking for buyer failures, right? We call it 2-try failure pattern. Let those buyers buy that pullback, right? Let them get up, let them buy the pullback and sell into stops. Let them get up, let them buy the pullback and sell into stops, right? Obviously, try to stay out of the range, right? Like this one, but that's the goal, right? The goal is get up. Let those buyers let them try to buy that pullback. You know exactly where their stops are. You know where their exits are. You know where their pain begins, right? That's where they start waving the white flag, and that's where we can sell into stops. And then remember, stay patient for that pullback, because the pullback usually comes shortly thereafter, right? So buyer failure, right? Buyer failure into pullback. Combination for that move back down. Now, where are the targets on this? One target is definitely going to be the low of the range. The other target is definitely going to be the low of the day. Now, if we go sideways here, what's the plan? Right? If we go sideways here, I want to sell above, right? Sell above the range. I've got my pendulum swing. The amount of the move below is the amount of the move above, right? We've talked about this. It puts us right up into that area. So that gives me an idea of where, as if we needed one more level of resistance up there. And then all we need now is to get up, right? Let those buyers think this is the one, this is the breakout, right? Let them buy that pullback and just sell into those stop losses. Right? That's what happens a lot. I learned that pattern. I learned this pattern. I learned this pattern by being that trader, right? This is the one, right? There's divergence. There's some other support level here. I don't care. If there's a range below you, that range will act as a magnet, right? I don't care what divergence thing is firing off, right? Or what bot did what, right? That range is going to be a magnet. So wait for those buyers to buy the pullback, and I'm selling into those stop losses on the way down. The hardest one is going to be if the market goes lower. Now, why would the market go lower on this chart? There's actually one really, really big clue on this chart that tells you there's a good chance this market doesn't pull back at all and goes lower back to those lows. You see it? No, it isn't the channel. It's not the channel. The channel is a good excuse for it. It's not the channel, though. It's this big, strong move down, right? Remember, in our trade room, we call these open loops, right? Look back here, right? Look back here, right? Strong move down. What does that do? Opens up a loop. That loop wants to be closed, right? Strong move up, right? What does that do? Opens up a loop. Loop wants to be closed. Now that's against the trend, right? It's above a range, so you're anticipating that one to fail, and when it does, short that sucker, right? Strong move down, opens up a loop. Bears want to go where? They want to retest that low. Okay, what's my concern as the market goes lower right now? What's my concern? My concern is selling low, selling at support. Right? Think about it this way, and this is honestly this is probably the easiest way to remove a bunch of losses. Always make sure you're selling at resistance or buying at support. right? I know. It's very basic. You probably read that back in, Trading for Dummies 101, 5 or 6 years ago. But if you just focus on always selling at resistance and buying at support, before I take a short trade, am I selling at resistance, right? Am I selling up here at resistance? Good place to look for it. But if I go lower here, am I selling at resistance down here? I'm not. And that's, again, put that on your checklist, right? I'm going to give you a checklist as a client of mine, so not to worry about that. But if you're not working with me as a client, right, remember, put that on your checklist, right? Before you go sell anything, am I selling at resistance, right? Not just a moving average resistance, right? A trend line, a swing line, some additional level of resistance. And as I go lower, how do I get that resistance? I need something overhead, right? I need that trap. And that's another reason why traps are so powerful, because it creates that level of resistance. It also allows you now, remember, there's a range overhead, right? So as the market goes lower, buyers will try once, buyers will try twice. They're going to try a couple times to get this thing going back into that range. I don't want to sell low. I want to sell high. I want to sell at resistance. And that's exactly the pattern I want to use as the market goes lower. Now, maybe I'm wrong, right? Maybe this market is going to get ready for another big leg down, right? I got a big target down there at 1914, 1908 is really the big low, right? 1908 is the holy smokes low, right, for these bears tomorrow. So if the market really pushes, right, so if we see a strong move down, a pullback, and a run going lower, okay, now you know where they're hunting for. Mark up those lows, mark up those highs, find that hidden channel. Again, I don't really care where that level is. All I care about is, do I have momentum? 1, 2, 3. That confirms the breakout. That gives the bears the wind at their back. The buyers are beat, and I can get short off the top of that channel. All right, guys? Hopefully that gives you a good plan for tomorrow, right? So now we've got a good spot to sell high, right? Got a good spot to avoid the middle. If the market goes lower, we know how to trade that. Last but not least, how do we turn bullish? How do you buy this market right now? We have to reverse, right? Strong move up, pull back to the moving average. Show me you mean it. Show me you mean it, because if you don't, we're going to sell it right back down in, right? Show me you mean it there with that 1, 2, the reversal, 1, 2, 3, right? And buying the first test off of that low. I'll tell you, there's a nice, big, juicy target overhead. If those buyers can get some control on this, you got that big range up around 1975, right? If they can get a 1, 2, 3 reversal on this, that's probably where they're going to be headed here, right? Back around that, again, 1975 range. I don't think 2000 is going to be within striking distance tomorrow, but who knows, right? Non-Farm Friday, final Friday of the summertime season. And if I don't see you guys tomorrow morning in our trade room, make sure you have a fantastic holiday weekend, a very happy Labor Day, or whatever holiday they call it, wherever you are from, right? I know they kind of label those holidays different around the world. So have a great day tomorrow. Don't forget, though, come out and join me every morning in the trade room, 8 o'clock Eastern time. I would love to kick some butt with you guys tomorrow morning at the opening bell. I'll put all the membership information in the description of the YouTube video. Don't be afraid to call the office. I'll be here. I will be here this weekend too, so don't be afraid to call the office, right? It rings to my cell phone when we're out of the office here, but with the summer, with the summer being canceled because of COVID, right? We'll all be here. We will all be here, that's for sure. And of course, don't be afraid to use that live support tool if you guys have any questions on the chat. All right, guys, keep in touch. Call me if you have any questions. Be safe tomorrow. Remember, discipline, patience, and then when you get it, hit it. I'll be there with you guys tomorrow in the trading room. If not, we'll see you guys next Tuesday, right? Have a great holiday weekend. That's it for me, guys. Great job this week. A very good week. Hard work. Almost finished up here. We'll see you guys tomorrow. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.